I got a question for you. We didn't prep this one, so I'm just going to throw it in there. But so the dollar declining, what's your gauge? And I have an opinion on this, and maybe you let me know if you want to hear mine first. But what do you think what does a lower dollar mean to our mortgage rates?
Take it away, Sean.
Yeah. So I think so if our dollar is going down, it gets more expensive to export our goods. To import our goods. Things get more expensive here in Canada if our dollar isn't as strong, which pushes inflation up, which would mean that our mortgage rates shouldn't come down quite as quickly and actually is an inflating thing. So a dollar rate, dollar coming down and continuing to go down, if we continue to see a lowering of the dollar, that could force the bond yields to go up, could force more investment into bonds, which then would increase our mortgage rates. I know I'm springing this on you, but what's your thought on that?
It is sort of a circle back to the stagflation conversation that we had earlier, where you're just stuck with high prices and high interest rates all at the same time. I assume, this is getting into an economic field that I'm not a expert in. I will definitely put my foot in my mouth on this one, so I'll defer.
All right. Well, let's see what happens. We saw fresh off the press this morning was the employment numbers came out this morning. So, which were better than expected. We saw, instead of 24,000 new jobs, which was what economists were expecting, we saw 91,000 new jobs, and the unemployment rate dipped from 6.8% to 6.7%. Not a huge dip, but it still went down. It was supposed to be flat. What are your thoughts?
I would consider 10 basis points to be flat. It looked like the highest job growth rate was in the public sector. So again, that's a concern if it's just government money paying for more government employees. And it looked like self-employment grew a little bit. So that's good, because I think the strength of our sort of like tertiary economy in Canada is self-employment, right? Number one, I think banking is probably a little bit too high. Natural resources in Canada are big deal, but for self-employment numbers to come up, that's good. But otherwise, I think this is a non sort of headline,
non-story for you.
It feels that way for me. I don't think it'll impact mortgage rates. I don't think it'll impact interest rates. I think a 10 basis point shift until it becomes a trend is just a month.
Yeah, I think you're right on that. I do think that we need further interest rate cuts. But if the Bank of Canada were to point to one number, it would be the 91,000 new jobs, which is almost 4 times as high as what they were expecting, pointing to that, well, maybe the economy isn't as weak as what we had thought. And they did say that they were going to look at the numbers and decide on the interest rate, the further projection of the interest rate at that time. So January 29th, which is the next meeting, if they were to look back and say, well, it's better than we expected, we did a series of 50 basis point cuts, let's pause in January and then let's pick this up again in March. I think that's the number that they point to as like, hey, let's let the U.S. administration come in. Let's let the employment's not as bad as we thought. It's not a burning platform where we need to decrease rates again. And let's see what happens. I do think for sure we're getting another 25 basis point cuts. But I think that, more from that, I just don't know if it has to happen in January for us to get there.
That's interesting. I mean, when I look at it, so like what you're potentially saying is it could be a hold on January 29th. Yeah. And I would say like it's 25 basis points almost guaranteed. I don't think that the employment numbers here and I guess there will be new employment numbers in January. Or sorry, no. I think that it still leaves the window open for a 50 basis point cut because most of those jobs came from the public sector, right? So if it was
40,000
91,000,
jobs.
yeah, it was a
Yeah, not quite
40,000.
half, but it's across like 56,000 full-time jobs in a variety of different. It wasn't just one sector. Like we did have transportation, finance. I'm forgetting the other one, but it was across a variety of jobs. So yes, some of it is in the public sector, but I still think that's the number that they could. Not to say they will, but they could point to that number and say, you know what, let's pause this one. Let's keep some of our powder dry. And if we need further rate cuts because there's 25% tariffs come in or there's just a whole bunch of uncertainty in the US, then that allows the Bank of Canada to be in a stronger position where they don't have to do a massive rate cut later on or try to catch it up or try to increase it. Like I just think that you keep it where it is. And I think the rates is about 67% last time I looked. Chance 67% chance of a rate cut, 25 basis points, and still 30 something percent for no change. So it's not that it's a foregone conclusion that we will get a rate cut. And I think this makes those chances of no change better.